Thanks for joining us in Power Lunch. This is Bloomberg Quint and I'm Meera Dugal. Let's get to the headlines. Indian equity benchmarks witness range-bound trade, private banks gain. Hindustan Unilever may report single-digit growth in volumes for the first time in 6 quarters, but profitability is likely to remain intact. Axis Bank hopes to hold on to a spot among the top wholesale banks as it grows its retail and SME books. That's word coming in from Amitabh Chaudhary. The liquidity pain in the financial sector will persist for at least another year, even though a full-blown financial crisis has been averted, says HDFC Bank's Aditya Puri. Cyclone Fani has moved away from Andhra Pradesh. The Met Department expects the wind speed to weaken in the next 3 hours. All right, we'll get you the latest on all that. But let's start with the markets. Yatin is here with us. Afternoon, Yatin.
Good afternoon, Ira. We are just 20-30 points up on the Nifty. However, the advance decline ratio is quite good as far as the markets are concerned. We have the advance decline ratio on the Nifty at 3:2 with 3 stocks gaining in trade. What's moving in trade on the positive side is select PSU stocks and private sector banks. So we have the likes of NTPC, ICICI Bank, and Kotak Mahindra Bank, all of these stocks gaining in trade. Tata Motors and Bharti Airtel also are the other stocks which are gaining anywhere between 1.5% to 2% in trade. What's not doing well is the entire IT pack, and after Cognizant reduced its guidance for the coming quarters, we have the entire IT sector which is under pressure. So we have the likes of TCS, Tech Mahindra, HCL Technologies losing anywhere between 2.5% to 3%. So it's the top loser sector as far as the markets are concerned in trade today. What's also not doing well is the likes of Britannia and HUL. Britannia posted the earnings call yesterday, and HUL ahead of the earnings today. Both of these stocks are down nearly 2%. In terms of active stocks, we have Yes Bank, which is up 1.5%. Reliance Industries, Indigo is up 3%. Reliance Power is another stock in the ADAG pack, which is doing well in trade. And Jet Airways is one of the highly traded counter in trade today, especially in the future and option segment, 2.5% down for that airline.
Yatin, thanks so much. We're going to move away from markets and business news to get you an update on Cyclone Fani, which made landfall in Orissa at 8 a.m. today, recording wind speeds of up to 175 kilometers per hour. Large areas near Puri were submerged underwater, and heavy rains battered the entire coastal belt. The Category 4 hurricane has now moved away from Andhra Pradesh and is expected to weaken over the next few hours. Let me get the latest on that from KJ Ramesh from the Indian Meteorological Department. Sir, thanks so much for joining us. Can you give us an update on where things stand right now?
So, cyclone, eye of the cyclone has moved completely onto the land. Still, quite a bit of south of the cyclone, some of the spiral component is still partly over the ocean. While doing so, it has started moving in northeasterly direction from Puri after making the landfall. And weakening tendency is there, but rate of weakening is not that appreciable as normally for a cyclone to happen. And it will still continue for quite a bit of day at a severe cyclonic storm, very severe cyclonic storm category. From the extreme severe cyclonic storm category, now it will go to a very severe cyclonic storm category, and all through the night, even before entering Bengal, still it might maintain the category strength of severe cyclonic storm.
Sir, can you give us a sense of in the next 3 to 6 hours, or maybe a little bit more than that, what are the areas that are likely to get most impacted, where precautions need to be taken?
Yeah, we have already alerted the state government to take care of 3 particular high impact components of this cyclone. One thing is the heavy rainfall associated with the cyclone right from the morning itself. Whole of the Bengal coast, from whole of the Odisha coast, from Ganjam to Chandwali, Balasore, started experiencing heavy rainfall. Now that heavy rainfall belt will slowly move towards the northern side districts slowly, but the wind component will not be avoidable. Wind is reduced from 175, 180 like that at the time of landfall, will go down to 150 kilometers for quite a considerable time during the day all over the coastal Orissa, and then rainfall will be there, very heavy rainfall spells will be there, and maybe very to very epochs will be there throughout the day all along the coastal districts. Even interior districts of Orissa will have a heavy rainfall segment, widespread rainfall activity will happen. And third damage potential is from the storm surge. Inundation associated with the coastal inundation from the storm surge, and the heavy rainfall also bring a lot of water onto the area, and so many rivers are there, canals are there, all that will cause a lot of inundation in the coastal areas. Three factors: damaging wind and heavy rainfall and coastal inundation. These are the three things Orissa has to deal with. But state government has taken extremely strong steps and extensive steps by mobilizing almost 11 lakh people to the cyclone shelters and relief camps, and massive 5,000 community kitchens they are operating. And in this effort of the government, we were told that about 18,000 to 19,000 community volunteers are joining in the emergency response actions and the preparations and preventive steps government has taken so far.
So, all right. So, just last question. So, by when do we start to see weakening of wind speeds and the impact of the storm?
That's what I said. Throughout the day, it will weaken to an extent of very severe cyclonic storm. That means up to 160 kmph maximum, ranging from 120 kmph, 130 kmph to 160 kmph. Wind speeds ranging in that intensity, wind speeds will be there throughout the day. And in the night, it will reduce to less than 120 km per hour, from 90 to 120, something like that, when it goes to severe cyclonic storm category. And sometime during the midnight, as a severe cyclonic storm only, it might enter West Bengal.
Okay. Okay, sir. Thank you so much for taking the time to explain and give us an update on what's happening with the weather situation in that region. We'll keep track of that, but let's move back to business news. Manoj Gaur just won't let go of JP Infratech. The promoter has approached home buyers in a bid to try and derail the insolvency process. Remember, the committee of creditors that includes home buyers now is voting on an offer made by one of the bidders, Suraksha ARC, under IBC. Vishnath Nair joins us here to tell us what's been happening on this front. Vishnath, lots of behind-the-scenes activity.
There's a ton of behind-the-scenes activity. Now, one point to remember is that this is Manoj Gaur's third attempt to try and win back the company. Now, in 2017, when the RBI drew up its first list of accounts that needs to go for insolvency on an immediate basis, JP Infratech was one of them. So, over the 2 years, he's not been with the company. But in May 2018 and again in February 2019, he had made specific offers to lenders. First time he was saying that he will bring in about 10,000 crores. Second time he said that he'll pay all of the dues for the lenders. And both times the lenders in the committee of creditors had shot down these plans, saying that there is no way you're going to get the money for these settlements. Especially because Jayaprakash Associates, which is the holding company of JP Infratech, that itself is under insolvency. So there are no source of funds. To avert all of this, he has now approached home buyers. Home buyers control about 58% of the vote in the COC. So whatever they decide could have a material impact on how the resolution process in this case goes forward. Remember, the 270 deadline for the second time round will come to an end on the 6th of May. So the decisions are being made within this week now. And if you fail to reach any kind of decision, then the case goes back into the whole liquidation loop. And then the Supreme Court has to likely intervene again and try to find out a resolution plan for this. But to ensure that home buyers are on his side, he's either offering about 1,500 crore from his own pocket. He's saying that we will put that money in, finish the construction of the flats that have been pending for over 10 years and deliver them. He's also saying that I will appoint a retired Supreme Court judge to oversee the construction operations and ensure that the flats are delivered on time. He's also saying that the lenders will be paid with minimum haircut while the operational creditors are going to be paid in full. Apart from all of this, he's also set up a call center. Basically, this is a place where the home buyers can call in. Remember, there are 25,000 home buyers, so there's no real way to communicate with each and every one of them. So once the home buyer calls into this call center, then they find out more details about the plan, and the call center is actively telling them to either abstain from voting for Suraksha or outrightly reject the plan. In which case, even if a portion of the home buyers actually reject the Suraksha plan, then the case goes nowhere. You will never reach the 66% threshold with just the bankers and some of the home buyers. And eventually the case will face liquidation again. So it's not yet clear what his game plan is, because remember 29A of the IBC ensures that defaulting promoters are not allowed a bid in the company. But it's clear that he's making all the moves to ensure that the Suraksha bid actually fails. And you know, the lenders have to take a call whether to go for liquidation or go for some other process.
So next 2 days is when there are meetings in
Yes. So today is when the voting ends. It would have ended by now, but on Saturday, it's tomorrow, there's going to be a meeting of the committee of creditors, including home buyers, and there they will discuss the option of, you know, whether Suraksha has reached the 66% threshold and what to do next. So all of this will play out over the next few days now.
All right, Vishnu, thanks so much for that. HDFC Bank, which is one of the lenders which managed to remain healthy even as its peers have been plagued by bad debt. The man at the helm, Aditya Puri, says it's thanks to the mantra of sticking to good old banking practices. I give you money, you give my money back. That's the way he put it. He was speaking to editor-in-chief of Bloomberg News, John Micklethwaite. Puri said that the NBFC issue that has been playing out in the markets locally is something that will result in some pain over the next 12 to 18 months. Listen in.
I think what we did was a very clear definition of our target market, risk, reward, and constant monitoring if any of our fundamental assumptions were violated, i.e. either the margin went down or our default rate went up. And based on that, and we strongly believe in good old banking, I give you money, you give it back. And we need to So I think to some extent, what happened was, at least for the large NPAs that accumulated, was probably less than optimum assessment of the capital project risks.
Is that an oblique way of saying the state banks weren't very good at this?
I will leave it at what I said. I said that we didn't do that because we didn't find the risk-reward matching.
But by most measures, there is a massive gap between the private banks such as yourselves, which have quite low non-performing loans. Once you include all the state banks, it
Yes.
jumps a lot.
So did we need a lot of improvement in the state banks? I would have to say yes. Have we made progress? I would say substantial progress. So if you see what the regulator has done between recognition, one, it did an asset quality review. So we've recognized our past sins. Two, they set up mechanisms for faster recognition of problems. Three, they set up the bankruptcy code, and that some people had started thinking they didn't have to repay the bank loans. Four, they moved in terms of changing their inspection basis. Five, the government is moving in terms of consolidating the public sector banks to reduce the risk and improve better, because obviously State Bank and Dena Bank are not the same.
Do you think the election makes any difference in this? I'm not asking you to rate Mr. Modi or Mr. Gandhi, but would there be a change at all if we were to switch from the BJP to Congress in terms of how banks are treated?
The good thing in India is once things are in the public domain, it doesn't matter who's in power. This will achieve its natural course. So I think if your question is whatever is in place for the financial sector reforms, as well as processes, plus what is required going into the future, will that continue? My answer would be yes.
And is there one particular financial reform you'd really like to see?
Well, there are a couple of them. I think we need to have a debt market. I think we must understand that liquidity is definitely important. Other than that, I don't think there is that much, but that debt market says a lot.
If you just push on the debt market, that would mean India having a capital market more similar to
yes,
America.
Yes, having a capital market with an interest-free yield curve with so that we can have what we call the bond currency and derivatives. So I think that will have to come about. They're working on it, but we do need that if we need to finance properly where the long-term financing should come from, where the short-term financing would come from, which needs a very clear look from ground level zero as to where the funds are going to come from, what are the assets available, do we need any reforms in our regulations, and I think that's in the process.
As long as I've been coming to India, which is sadly a long time, people have been talking about the idea of an Indian capital market. And one theory is that banks, such as yourselves, are actually quite happy with the current system because it means you're the only game in town.
That second theory I don't agree with, because I can't make a lot of money that I would make in derivatives, and we are a major participant in the capital market.
You think it would be better for you if there was?
I would think so. Yes, it would also allow us to manage our risk better and introduce more products.
Can we talk a bit about other forms of competition? Well, you've had all these non-bank financial companies, and they have not always been a great success. You have IL and FS; they blew up last year. Is that mess being sorted out? And when roughly do you expect that to be sort of finished?
I think the NBFCs, and I think it's recognized here.
That's non-bank financial companies.
Non-bank finance companies actually needed to have regulated themselves better. But now the regulators are coming and putting in place. What happened was they had an asset liability mismatch. They didn't have a liquidity cushion. And they probably needed stricter inspection. So what has happened now is we at one time had a crisis. Now I think the crisis has gone. Problem still remains. So two things are happening. One is the banks have tightened up. Two, the regulators have tightened up. Three, these companies have slowed down their growth. Four, they're trying to dispose of assets and get rid of the asset liability mismatch. Despite all this, there will be some...
Did you have a kind of end date for that?
I would say within the next 12 to 18 months.
All right, Axis Bank, on the other hand, has been weighed down by stress in its legacy corporate book, but the lender is working to turn around a corner under the new CEO, Amitabh Chaudhry. Axis has shifted to a more sustainable, conservative strategy of growth, as he puts it. And as part of that strategy, while lending growth will be focused on retail and small business loans, Axis Bank doesn't intend to give up its space in wholesale banking either. Are they essentially trying to follow in HDFC Bank's footsteps? Let's listen into what Amitabh Chaudhry had to say.
We are not trying to emulate anyone here, but please understand that Axis Bank has been a powerhouse on the wholesale banking side. There is a clear consolidation happening, and let me just be very clear what I'm saying. I do believe very strongly that on the wholesale banking side, there will be 5 to 8 players, and I'm being generous here when I say 5 to 8. 5 to 8 players who will emerge, who can provide full suite of services on the wholesale banking side in terms of not only just loans, but all the kind of other products on cash management, treasury, FX, custody, and being able to do bond issues and equity capital issues, etc. I think we have this unique opportunity to be one of them. We're already one of them. There's a unique opportunity as this consolidation happens to emerge as one of those 5 players. It will be stupid on our part to let go of that space, because there's enough money that can be made, because in each of these sectors in financial services and banking, it's the top 5 players which get disproportionate share of income. So we want to be one of those players. So wholesale is an important part of what we want to do. Yes, retail might be growing at a slightly different rate than that of corporate. So in the overall share of business, wholesale might be looking lower. But I do believe we want to have the balance, and we will get this balance right over a period of time. Obviously, wholesale has been on the receiving end of things over the last 3-4 years. But I want the wholesale team to start looking forward and start generating more business. We grew at 18% last year on the domestic loan advances. We have created some more groups to bring sharper focus to our wholesale franchise. So we have created an MNC group, we have created a mid-market corporate group, and we want to grow that business because we believe there are huge opportunities there.
But you don't want to do infra, you don't want to do project financing like every other bank. So, I mean, who's going to do that business in the country?
It's not that we don't want to do infra or project finance.
You still think there isn't enough sort of risk-adjusted return in it?
Because I think the regulatory issues, broadly defined, are time indeterminate here, in the sense that...
But IBC should have changed some of that, right? That was the whole point.
No, IBC is changing the resolution process. We are talking about doing project financing. That means I'm, funding projects here. Now, we don't know. It's just not possible to predict or put your arms around whether someone could go to a court and stall the process, or some regulatory authority could take a different stand and bring your whole, the project infrastructure you created to a grinding halt because they've changed their mind. And you cannot mitigate those risks. So unless like for example, let me give you an example on the positive side. NHAI has come out with this hybrid model, and they are getting funded. It's not they're not getting funded. But the government then needs to come out with some of those models where some of these risks can be taken care of. So for tomorrow, there has to be some kind of backstop, where if something happens, which is unexpected and driven by some part of the government, that we need to have a mechanism in place which pays us out. We can't be on the hook then for the next 10, 15 years wondering how this project will ever see, go into commercial production of some kind. So I think that's why people are stepping away. And till that is resolved and we are convinced that those risks are taken care of, I think no credit committee, including that of the board, will approve any new transactions. It's very, very difficult. Because please understand that we have shareholders, we have the regulator, who are questioning us as to why you're taking those risks when there are no returns.
No, I get that point. Okay, so this is more a lament, and we spent years complaining about the fact that every PSU bank was a clone of the other, and now we're going to have private banks which are all pretty much doing the same thing: retail, SME, little bit of picky AA, AAA, corporate lending, working capital, and that's it. I mean, that's not good for the economy.
Oh, it is not good. So the new projects, that means, well, what will happen in the new project? That means the promoters you will back have to put in more equity upfront, or they have to do it in companies where they are well structured or capitalized. So yes, it is putting more onus back on the promoter in comparison to what we had in the past. And yes, the promoter returns as a result go down, or they will not invest in some of those assets, or people will continue to do kind of brownfield kind of expansion. So in a way, the companies who are already there, who are large enough, will be the ones who will continue to benefit going forward. New entrepreneurs might not necessarily come because they are not willing to take that kind of risk. It happens. When you go through a crisis like this, the pendulum tends to swing, quite a bit. But at the same time, at least in banking, the lessons at least I've learned when I used to be a banker is that all of us have drawn a line in the sand today and said that we'll not do X, Y, Z. But I think the markets and you not sticking to what you want to say no to sometimes shifts that line in the sand to taking more risk over a period of time. I do hope that the Axis Bank sticks to the line in the sand for much, much longer than some of the others, so that when the next cycle comes, hopefully we are much better off than some of the others.
All right, let's move away from banking. Oil refiners in Asia are approaching Saudi Arabia for more crude. U.S. sanctions on Iran, geopolitical turmoil in Venezuela, and unexpected disruptions from Russia and Nigeria have left consumer nations scrambling for oil. Debjit Chakravarti of Bloomberg News joins us with the details. Debjit, what's brewing in the oil market? The most important question for us right now.
Yeah, I mean the non-extension of the waivers, U.S. waivers on Iran oil has suddenly created a kind of a scramble for shipments among Asian refiners, and all of them are now looking for possible additional barrels from everyone, and obviously Saudi Arabia being the biggest of the OPEC producer, they have been approached by all these traditional buyers of Iranian crude for additional volumes, which is above the term contracts they have with Saudi Aramco. Refiners from India to China to all other big oil importing countries in Asia have approached Saudi Aramco for additional barrels. That is what we get to learn. And it seems like the market is getting tighter. We have unexpected disruptions from Nigeria, from Russia because of the oil contamination, and then we have obviously the sanctions on Venezuela, which is kind of tightening the market. And the surprising element is that these Asian refiners are wanting to contract additional volumes for loading in June and July. Usually that is not the case. Like for the June contract, Saudi Aramco would announce the OSP this weekend. But before that, the refiners have approached the producer for tying up supplies, which is very unusual. So it seems that there's a lot of scramble for shipments happening to fill in the gap for the Iran supplies, which have been stopped because of the non-extension of the waivers, US waivers on Iranian oil.
All right, Debjit, thanks so much for that. Appreciate that story. Let's move on and actually call it a wrap on Power Lunch today. Thanks so much for watching.